Hello friends, welcome to my April 2023 Tesla valuation. I currently see the stock as a sell because its current price of 165 is considerably higher than where I think it should be at around 106. Now I'll get into what I think about the company, where the company is at in terms of potential growth, its aspirations, and the competitive landscape. And then I will build all my assumptions and thinking into a discounted cash flow analysis and try to have a number that um, we can track, right? Think about Tesla's stock price. So first of all, Tesla is an auto company right now. 90% of its revenues come from automotive and services segment. Only 5% comes from energy generation and storage segment. But it is an auto company with overly idealistic dreams because it has aspirations in other segments. For instance, Tesla claims that its energy generation segment will be worthing as much as its auto segment in the future. It doesn't give a specific date, but that's how it sees things. Annual sales of 20 million cars by 2030 is another goal they've set for themselves. 50% annual growth rate in vehicle deliveries going forward. Its Optimus robot that it has been developing over the last few years would be on sale in 2027, costing around $20,000. It's also counting on its ability to provide full self-driving capabilities on its Tesla fleet, and be able to provide this robo-taxi service as well. Finally, Elon Musk, the CEO, has claimed that Tesla would be reaching 4.5 trillion US dollar of market cap in the next few years. Now that would make Tesla one of the biggest companies in the world. Okay, so I first like to look at this figure of 20 million cars by 2030 and question that and examine that. So first of all, is it feasible? How that would look like in terms of as a percentage of global sales. So the graph on the right shows number of annual car sales in the last decade. Actually, the last decade, right, from 2010. And it has remained at around 70 million cars per year. So 20 million cars out of 70 million cars, that represents around 30% of sales. That means for every 10 cars sold, 3 would be a Tesla. I don't think that's realistic. And why? Let's look at the competitive landscape. Because currently, the biggest market share held by an auto company is Toyota at around 11.5%. So even Toyota, who has a lower operating margin because it sells lower end, more consumer friendly cars, even given that its lower price, it was only able to attain 11.5%. I find it difficult to believe that Tesla would be able to reach, almost a 30% market share by let's say the next 10 to 20 years. Also, if you look at the operating margin of Tesla, it has actually fallen in the last few quarters to levels similar to some of the traditional players such as Mercedes and Stellantis. Obviously, that's still at the higher end of the automotive making sector. If you compare that with Hyundai, Volkswagen, Honda, BYD, and Ford, it is still considerably higher. But it wasn't as high as it used to. It used to be 16%. And that's due to the price cuts recently. And I want to talk about that a bit. So I think the price cuts this year, which has happened 6 times already, doesn't really help with Tesla's cool image, because I think once it becomes ubiquitous, it would lose this sense of coolness. And other challenges are that full self-driving beta has been causing issues, and there are also privacy issues regarding Tesla's cameras and how they track the drivers, their owners, and that Tesla has little to no dealership support system. And lastly, in terms of the hardware, the car continued to have quality or build quality issues. So I think people claim that one of the competitive advantage of Tesla is that it integrates software and hardware very well, similar to how iPhones, Apple integrates the build quality of iPhones and iOS very well. Now I think the difference between iPhones and Teslas is that the build quality of iPhones is great. It's amazing. That's because Apple, before it made iPhones, had been a major player in the computer industry. It was able to, it already had, great expertise in how to build great products. So when iPhone was first released, there was no doubt, no problems with its build quality. Similarly, iOS, there weren't many issues with iOS because Apple has been developing macOS for a long time, for like over 30, 40 years before iOS first came out. So I think, Tesla, it integrates soft and hardware, but it's more of a hit or miss. And that has allowed some of its competitors to catch up and prevented it from building as luxurious of a brand image as Apple. Right, that's what I think. Okay, let's get into the DCF. Here I want to talk about my assumptions then, right? So I think by 2032, I expect Tesla in a very optimistic scenario to be able to gain 10% market share. And I think even this estimation is very optimistic. That would mean 7 million annual cars sold, assuming car sales to be around 70 million. That would make Tesla almost as ubiquitous as Toyota. Now, I think another challenge would be that we see that recently China has become a really big player in the EV market, and I'm just assuming that EV would take over really quickly, right? So I would find it difficult to believe that Tesla would be able to gain a significant market share in China. First of all, because BYD and Chinese companies are really good at producing EVs, and they can produce at lower costs. But also, I think geopolitical tensions would prevent Tesla from gaining too much of a foothold in China, because I think EVs would then be seen as like a national security risk, or that a very subsidized industry that China would just want its own companies to thrive and develop, instead of seeing the US companies take over. So I think hitting 10 million or hitting 10% market share would already be kind of a stretch, because you have that China headwind going forward. But I will stay optimistic for now, right? 10% market share by 2032. I assume its operating margin to increase from 12% in 2023 to 17% in 2032. And going back to this competitive landscape, 17% would be very high, right? Very, very high. That's higher than Mercedes. That's higher than all these companies we see. And again, I'm staying optimistic. I think Tesla would become very efficient at its production processes. And maybe that's because it's one of the first players, first EV players. It has all its production lines suited for EV production, and yeah, that's my thinking. Tax rate, it's currently paying 12%. That would definitely increase to more, I figure more around 25%, because that's the global company average tax rate. So that's pretty simple. Sales to capital ratio, it's currently at 1.74. And I've estimated that myself. You can definitely go and have a look at the Excel file that I also linked to this website. But yeah, it's currently at 1.76. Take into account all the revenues and the assets. I expect the sales to capital ratio to go from 2 to 4, and again, I think that's highly optimistic. Reason for that is that Tesla has been spending a lot on capex recently, and I think as its factories become more efficient, it would have to build maybe less factories to be able to crank up its sales and its car deliveries. Again, optimistic assumption. Next, I'm assuming 2% growth after year 10, as I don't see much potential for the auto industry to grow, but other business segments may drive growth, such as energy generation, or even potentially robotaxis and the Optimus robot. I think it's difficult to put a growth rate on all these segments because there's such a small part of Tesla's current operations, and many of these are in the very initial development phase. So you can dream wild dreams, but I think currently let's focus on the auto segment and the segments we can actually put a number to. Now, in terms of the discount rate, I assume the risk-free rate as the US 10-year yield at around 3.75%. The beta is the automobile industry beta at 1.53, and the equity risk premium I calculated through getting the IRR of the S&P 500 earning estimate. I got that from Bloomberg. All right, so these three things give us a cost of capital of 11.3%, and that's the cost of capital now. I expect that to decline over the next few years to around 9%, and that's because Tesla would become more of a mature company in the future, and obviously that would lead to its cost of capital becoming lower. Yeah. Okay, now I want to give some context for average sales price, because we talk about price cuts of Tesla this year, right? So Tesla is increasing selling lower price vehicles at increasing lower prices. However, I give Tesla the benefit of the doubt. I assume by cutting prices, it would gain significant market share of 10%, and we talked about this. And due to its industry-leading software, it would be able to charge prices similar to Lexus Infinity at around $50,000, $55,000 US, but at the volume of Toyota. Now, if you look at Toyota, it is charging around $38,000. I'm assuming Tesla to be able to charge 50 to 55. Right. Okay, so let's get into the numbers. I estimated revenue by projecting Tesla's market share over time. So currently in 2022, it was at around 2%. I assume it to increase every single year to 3% this year, 3.5% next year, 4% the year after that, and all the way to 10%. And I assume the total car produced per year to be around 70 million. So that's like 3% of 70 million, 4% of 70 million, etc. Average sale price. I'm just using the data from this slide. 65,000 early last year, right? I think it has dropped, but it's fine. Let's leave it at that, right? I'll give Tesla the benefit of the doubt. Again, very optimistic numbers, and I'm projecting this to drop eventually to 56,000 because the EV market will just get more competitive, and as the market gets competitive, obviously you can't charge such a higher price as before. So then if you multiply cars produced by ASP, you get revenue from car sales, and yeah, that's the number. Again, very, very optimistic, right? We have revenue here, growth rate here of revenues. Operating margin we talked about, it's currently at like 11 to 12%. I'm assuming it will be able to get this up to 17% 10 years later. And that's all these assumptions. Sales to cap ratio we talked about, free cash flow. Cost of capital, 11.3% now, gradually becomes 9%. 2% growth after terminal year, and that's all we have, right? $106. Very far off the $165 stock price Tesla is seeing now. But some people may claim, hey, but Tesla is not just the auto business. True. But if we see it as what it is now, it is an auto business. The auto business is significantly overvalued, which means that most of Tesla's other businesses, namely energy storage and generation, the Optimus robot, the robo-taxis, would have to be roaring successes for Tesla to be even priced at a fair value right now. So therefore, I see more downside than upside potential, but one can dream. But I will not put my money on the stock. So very simple. Its other businesses have to do really well, because this price, 106 that I got, was already built on very optimistic assumptions of its EV business. Even if its EV business does really well going forward and becomes as big as Toyota and selling at higher prices than Toyota, the stock would still be undervalued or overvalued if other businesses don't outperform. So its other businesses have to outperform by a huge margin for Tesla to really be valued as highly as it is now. And like I said, it's very difficult to analyze the robotics business, very difficult to analyze energy storage. I tried to. You can look at my estimation of its energy storage business. My estimations was that it was going to continue losing money over the next few years and then maybe making some money. But I don't see it impacting the net value too much. So that's my thoughts. Feel free to leave your comments on this website. I like to know what you think about my thoughts. And yeah, thank you for tuning in.